So let's talk about Venture Global. This is a company that has, in just a few years, come out of nowhere and completely flipped the script on the multi-trillion-dollar global energy market. They did it with this absolutely brilliant idea for building LNG plants and, in the process, kicked off a multi-billion-dollar legal war with some of the biggest names in the business. And that's really the key question here, isn't it? The old guard, the established players, they took decades to build their empires. Venture Global is on track to become the biggest player in the US in less than a decade. So how on earth did they do it? All right, let's get into this, because their big idea, honestly, it's kind of brilliant in its simplicity. It's all about completely rethinking how you even build one of these massive energy projects in the first place. Okay, so you know how most of these giant LNG plants get built? It's like commissioning a custom mansion. Everything is built from scratch right there on site. It's incredibly complex, it's slow, and it costs a fortune. Venture Global's approach? It's more like playing with Legos. They build standardized pieces in a factory, ship them out to Louisiana, and then just plug them together. This simple shift, it changes everything. And if you don't believe me, just look at the numbers here. We're not talking about a small improvement. A traditional project can take 4, 5, even 6 years to finish. Venture Global is getting it done in around 30 months. I mean, we're talking less than half the time. That is a massive deal when it comes to risk and, money. So here's how they do it. It's this beautiful 3-step process. First up, these identical liquefaction trains are built and tested in a factory, nice and controlled. Then they get shipped out to the site in Louisiana, and finally, you just plug them in. It's a simple, repeatable, almost assembly line process that takes all the guesswork and delays out of building on site. All right, so that's the engine, right? The modular process. Now let's see what kind of horsepower this thing is putting out. Because the results of this strategy are frankly staggering. This speed isn't just some cool engineering trick. It's a financial weapon. See, by getting these plants up and running so much faster, Venture Global started making money way ahead of anyone else. In just one quarter, Q3 of 2025, the company posted a 260% jump in revenue year over year. That's the kind of crazy growth you'd expect from a Silicon Valley tech startup, not some company building massive energy plants. And that growth isn't just on paper. It's translating into real-world dominance, and fast. They started producing at their first facility in 2022. The second one came online in 2024, and by 2027, get this, they are projected to overtake the current industry leader, Cheniere, and become the #1 LNG exporter in the entire United States. But wait, we have to talk about these lawsuits. Because this incredible speed, well, it created a massive opportunity and an even bigger headache. Just as their plants were starting up, global energy prices went through the roof, and Venture Global suddenly found itself sitting on a gold mine. Okay, so to understand this whole mess, you need to know about something called commissioning cargoes. Think of it like the test batches of cookies a bakery makes before its grand opening. It's the gas they produce while they're still testing everything out, before they officially declare the plant open for business and start honoring their long-term contracts. And let me tell you, Venture Global didn't just sell a few of these. They sold a ton. Between 2022 and 2025, while their main facility was technically still in this testing phase, they sold over 400 of these cargoes on the open market, where prices were absolutely skyrocketing. And get this, according to documents from Shell's lawsuit, those sales brought in something like $20 billion. Meanwhile, the guys who had signed the long-term deals, Shell, BP, all the big names, were basically told, sorry, we're not ready for you yet. You can just imagine how well that went over. So, of course, this blew up into one of the biggest legal fights the LNG world has ever seen. The industry giants pushed back hard, but the results of these court battles have been, well, confusing, to say the least. First up, in August 2025, a tribunal sided with Venture Global in the Shell case, a huge win. They said the company did not break the contract. But then, just 2 months later, bam! A totally different tribunal, looking at a nearly identical case from BP, ruled against them. So you've got 2 almost identical cases with 2 completely opposite results. What is going on? Well, the argument against Venture Global is pretty simple. From the skeptic's point of view, it looks really bad. Shell, BP, and the others say Venture Global basically ghosted them, deliberately delaying the official start date just so they could sell all that gas to the highest bidder on the spot market. They see it as a classic case of profiteering. Okay, yeah, it doesn't look great on paper, But then you have the defender's argument. That first court actually agreed with Venture Global. The judges looked at the contract and said the language was crystal clear, the plant wasn't officially open for business yet, so they could sell that test gas to whoever they wanted. It's a legal loophole for sure, but a multi-billion-dollar one. So this is where it gets really crucial. You have to separate all the legal noise, all the headlines and the lawsuits, from the reality of what's happening on the ground. Because while everyone's focused on the drama, the market might be missing the real story. I mean, the market absolutely hated that BP ruling in October 2025. The stock just fell off a cliff, dropping over 20% almost overnight. Investors saw the legal risk and just bolted for the exits.
But this right here, this is what shows the huge disconnect. While everyone was panicking about the lawsuit and the stock was tanking, Venture Global's production engine was just still going. This chart shows that by 2027, they're not just competing with Cheniere, they're on track to surpass them. All that legal noise is hiding the fact that they're fundamentally taking over the U.S. export market.
And the proof is right there in the numbers. In the very same quarter that the BP ruling came out, they exported a record 100 cargoes. They're still signing massive new 20-year contracts with huge global players, and they are still on a clear path to building over 100 million tons of capacity. The point is, the core business isn't just running, it's flooring it.
So that leaves you with the big question, right? Are these guys just reckless rule breakers who got greedy and betrayed their partners? Or are they ruthless innovators who found a loophole and used a revolutionary new model to build an energy giant faster than anyone in history? The truth is probably somewhere in the middle, but one thing is for sure, they've already changed the game forever.